So I'm currently long on the market. This is way more risky than anything that we've done so far this week, but I genuinely think that we should get a bit of a bounce. So in today's video, I'm going to explain the reason for that. We have to take a look at what the next steps are for the overall market. We're also going to take into account that Powell is going to be speaking tomorrow morning at 10 a.m. We're going to put all that stuff together. We're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, and the bond. All right. Without further ado, let's get started with the video. All right, so first things first, this is a chart of the S&P 500 on the daily, and we can see that the 50% fib failed, okay? I've been saying that 435 needed to hold as support since basically we went long, right? So we went long a few days ago when we went long. I was saying that 435 was a very, very major, important level of support. So currently, I got into calls with basically 435 as a level of support for late September. And the reason for that is because if we can still maintain above 435, we can still continue up. The other reason is after a huge, this is clearly a bearish engulfing candle. This is clearly very bearish candle. But rarely after we get such a devastatingly bearish candle, within 2 days, there's a very high likelihood that this play ends up being bullish. So if you were to go long here, right? Yes, tomorrow we could be more red, but then the day after tomorrow, which would end up being Monday, it generally becomes a positive play. So that is essentially what I'm expecting. Obviously 435 is still a very major level, and a lot can still happen intraday tomorrow because Powell speaks tomorrow at 10 a.m. And that is a very, very important meeting that's going to happen. And other Fed members speak afterward. But after such a devastating move like this, when it clearly looks very, very bearish, yes, we did fail. The momentum is still down. The dollar still looks bullish. We're going to take a look at the dollar as well. But this 435 level just looks really, really good. And if somehow something happens during the meeting tomorrow, first of all, we're holding on to late September calls. So our risk is definitely still going to be defined, and it's not something that's going to be devastating if the price does fall. And that's one of the main reasons. The other thing is that the NASDAQ took a huge hit today because all of the hype with Nvidia and everything. Nvidia retraced all of its gains, and the NASDAQ was the biggest loser, right? So what I'm expecting, alongside going long the SPY, I am expecting the IWM, because you could clearly see right now the IWM still holding above 183, which is still very, very good, right? So the fact that the IWM is still holding above 183, it didn't lose the most, right? Compared to the NASDAQ is down 2.3%. The Russell is only down 1.3%. So the fact that the IWM is still holding support, if we can get a bit of a bounce on the IWM, that is going to help the SPY. So that is also what I'm expecting. And that's why we went into calls for over a month out. If it doesn't work out, it is what it is. This is much more risky than the other trades that we took because we're basically trying to fight against momentum. And I'm expecting, I don't expect us to randomly open up green tomorrow. I'm expecting us to be red. And I'm expecting we could break below 435 intraday tomorrow pretty easily. I'm not expecting us to hold that level. And I'm not, genuinely, I'm pretty confident that we're going to break below 435. But the reason why I got into late September calls is because if for some reason we do open green, which there is a very high likelihood chance that that often happens, we're good, right? And then the other concept is if we get down here, we're holding on to our 430 our calls, right? There's another opportunity to go long. So then at that point, once we double tap at this level of support here from August 18th, that gives us another opportunity to scale in. And then, if that breaks, then obviously that's way more bearish. But being completely bearish after a this clearly looks way too bearish. And when something looks really, really bearish like this, you can't really trade alongside that, um, that momentum. It's too, if it looks too obvious, then it's just a trap. Honestly, generally that's what happens. So if you look, for example, um, here, clearly, July 17th right here, right? Clearly a big bearish engulfing candle. We ended up gapping up. Okay. We could just look at multiple different bearish engulfing candles. This was a really, really big bearish candle right here. In March, we ended up gapping up. Obviously, it still fell afterward, but it's gapped up. And then a few days afterward, it did well. Like, for example, here, right? We had a very big bearish engulfing candle in January. We fell lower the next day, but then the day afterward, which is the equivalent of Monday, we bounced. So, yeah, we just have to see how the market plays out. And regardless, we were on the right side of the market basically all week. And it is what it is. It's just a way to get our feet wet with something overnight. 1 month out, I'm pretty confident in it. I like the play. And it looks pretty good. IWM is holding support. But yeah, so there's my analysis with all of that. Now we can go ahead and take a look at the dollar and the bond. So the dollar obviously is important because it has an inverse relationship to the market. And clearly we can see that the dollar is strong. So when the dollar is strong, then the overall market is going to show weakness. And that's what we basically see. The dollar is starting, it may close above yesterday's high. So that is obviously going to be very bullish on the dollar. And then the other bullish thing on the dollar is that this MACD indicator looks very bullish still. So we are still about to cross above on the MACD. And when we get a cross above, that's obviously bullish for the momentum of the dollar. And that means that there's more room to the upside. Dollar looks bullish. Not going to lie to you here. Dollar looks like there's more room to the upside. It is what it is. We'll see how that affects the equities. But then the bonds are looking a bit interesting as well. Because the bonds, the MACD is very overbought, but it's doing exactly what it needs to. There's a lot of buyers coming in for the bonds. There's a lot of bond buyers. So when there's a lot of people buying bonds, that's generally good for equities and the overall market. So what we can see is obviously the bonds, this is a falling wedge. Falling wedges are very bullish patterns, and it leads to breakouts. So what this is, textbook initiation of a breakout. And this candle is basically just coming back and retesting to see if this can maintain itself. If this maintains itself and if buyers continue to buy on the bonds, then the overall market is going to be good to go. But zooming out, overall, look, once again, in no way, shape, or form am I bullish on the market. Oh, this is just a play to play overnight. I still sincerely think that in the next few weeks, months, we will see 420 on the SPY. So the safest, absolute safest thing that you could be doing is whenever we get to major levels of resistance, grab some October puts, grab some October or November puts, and just call it a day. Nothing else needs to be done. When we come back to, just literally, when we go to levels of resistance, the safest thing to do, scale into puts for a longer term. That's really it. That's really it. Bitcoin also looks pretty good for a dip buy, and the reason that's another thing that reinforced my my thought process of going long, because Bitcoin looks good to go long as well. Basically, these levels have been holding, and if Bitcoin can hold this, that would mean that the IWM is also going to be doing well, because the IWM. So at times, either the IWM or the NASDAQ like really affects Bitcoin's price. But if basically the overall market can get a bounce, Bitcoin is showing support. If the market gets a bounce based off of Bitcoin holding support as well, then that's going to be good. Basically, if Bitcoin bounces here, then it helps propel the overall market to bounce as well. And it looks it looks good. I would be very surprised if Bitcoin um consolidates here and then ends up making another low without first bouncing a bit higher. So I would say at least 27 to 27,200. And at that point, if Bitcoin touches that level, then the overall market should get a bit of a bounce to around like 440 as well. And that's basically what I'm expecting. So I'm expecting a bit of a bounce going long here with 435 as a stop. I would see at least 440 um as a bounce. But yeah, we'll see how that goes tomorrow morning. Powell has that speech, and we're gonna see how everything plays out. But definitely, I would not. The only thing that you should be doing, there's only two trades to be made right now. You either take lotto puts because going short right now is very very risky. You would take lotto puts after a huge bearish move, or take long term calls with a stop loss, and that's basically all we're doing. So yeah, that should be it. I hope this made sense. I hope you know you guys see my reasoning with stuff, and yeah, let's see what happens. But yeah, there's nothing else to really talk about. Hope you guys had a wonderful day, and I will see you guys bright and early tomorrow morning. I'm gonna be streaming, and yeah, so I see Powell's speech and everything together, and we'll see how everything plays out. All right, so hope you guys have a wonderful rest of your day. I will see you guys bright and early tomorrow. Take care. Have a good one.